Hi everyone, welcome back to my channel, the 8th wonder of the world. In this video, I'm talking about the news developing around Yes Bank, about the retail investors, bondholders and depositors and Q3 results. Delayed results as you all know. Please like and subscribe the channel for more updates and press the bell icon for more notifications from this channel. Yes Bank, which was my favorite stock many years back, it had given good returns for me a few years back as a long-term investment. The company was my favorite portfolio stock, but I exited the company's shares a few months after it split and never held it as an objective of long-term holding henceforth. It is a sad thing to see the company has eroded so much wealth for the investors and traders alike. As the bank is undergoing a government-led bailout led by a team of a consortium led by SBI, which now includes HDFC Ltd, ICICI Bank, Axis Bank, Kotak Mahindra, Federal Bank, Bandhan Bank and IDFC First. So this is the capital these banks are bringing into S Bank. SBI 7,250 crores for a 26% stake. ICICI Bank 100,000 crores. Axis Bank 600 crores. Kotak Mahindra Bank 500 crores. Bandhan Bank 300 crores. Federal Bank 300 crores. HDFC 100 crores. So now about the quarterly results. Yes Bank late on Saturday reported a loss of 18,564 crores at the end of December quarter, as against a profit of 100 crores a year ago. It reported a loss of rupees 629 crores in September quarter. Now looking at the loan book of Yes Bank. So you can see the loan book is at 40,709 crores. The corporate NPA constitutes of 97%, which is 39,501 crores, and a very small segment of that is totaling up to 3% for retail and MSSE of 1,208 crores. The NPA is worse than it was expected by the analyst and the market for participants. Now talking about the 81 bonds. So S Bank's 81 bonds worth 8,400 crores are written down to zero. The speculation over the fate of additional tier 1, that is 81 bondholders seems to have ended, with the bank informing the exchanges that this portfolio will be written down entirely, which is a very sad thing. Now there will be rush to sell off similar bonds in the market, which will result in a terrible situation. This would impact capital raising plans of the other banks. The complete write-down of 81 bond portfolio will make it more difficult for the companies in this banking industry to raise money, as recently IndusInd Bank deferred a board meeting which was meant for discussing to raise capital. As per the credit rating agency, a total of rupees 94,000 crores in 81 bonds in the Indian bank, and many institutional investors have written to RBI concerning the write down of the bonds of S Bank. There is a bigger worry for the equity shareholders. All the equity shareholders holding 100 shares or more shares will have a restriction in selling their shares. I fear this is worse for any retail investors, as being a retail investor. I feel this isn't very good. The gazetted notification which is available on the website states that the retail investors can only sell 25% of their holding of their shares and the rest 75% as a lock-in period of 3 years. Only retail investors who hold under 100 S Bank shares are exempt. The lock-in is effective as of March 13th. So basically this means tomorrow, that is 16th of March, when the stock market opens, any shareholders having more than 100 shares will be allowed to sell only 25% of the shares, and the rest of the shares will be in lock-in for 3 years. A week ago, the additional Tier 1 81 capital bonds that Yes Bank had issued shall be written down permanently. This is a confirmed news to the exchange. So this announcement has caught the mutual fund industry by surprise. Now, retail investors are facing the brunt of this crisis. I believe the equity shares are instruments having the highest liquidity because it is freely tradable. But this defeats the purpose of liquidity. It can be argued that this is to reduce volatility, but retail investors are hard done, even the bondholders. The only happy thing about this announcement will that it will calm the fears of the depositors. Assurance that the money in the deposit is much safer is evident. I only hope in 3 years the equity shareholders have a reward with good returns, which any long-term investor should expect. And I would say the good days are ahead, but you have to go through the turmoil if you're a S Bank stockholder. The learning from this fiasco: never invest in the stock market with the money you need in short-term period. The investor should invest only with the surplus money if anyone has. For the investors at times like this, we must be extra cautious. I believe the worst financial decisions are made when the person is fearful. There is nothing wrong in buying the shares a little higher than the bottom. No one knows how deep the markets can go. I have been following the world news too. The ramifications about coronavirus is high as many countries are locked down or going to lock down in various forms, which is not suitable for the world economy. Our country is not immune to this grave situation. From all the numbers and figures, this is the fastest turn to enter the bear market. As you all know, this is a different crisis in the world market now, which the world has not seen. I would say no analyst or veterans would be able to guess the short to medium term outlook because we are dealing with a different kind of issue and there is no solution for it now. We do not know when we will have a solution for it. In the worst case scenario, this could get very bad. I am not pessimistic or overly cynical, but I am asking you all to be cautious to have capital to invest. You can all invest when there is more clarity and the suitable measures are undertaken about the coronavirus, and the Indian economy should be flourishing, growing bigger in the upcoming days. I would mention this is not the end for the markets, but there will be many more issues for the other banks or financial companies, and it should be seen cautiously in short to medium term for investment. I suggest it's best avoiding banking companies and other financials companies. We should be in a much better place in 3 years. And in the end, I want to mention that we would be in a better place in 3 years. Just experience the volatility, focus on finding the mispriced stock which has good value, be courageous and smart during this painful time. There are good days ahead for the investors. Thanks for watching this video. Please like and subscribe and press the bell icon for more notifications from this channel. This content is intended to be used and must be used for educational purposes only. Please do your own analysis before making any investment based on your own personal circumstances and consult your financial advisor.